Hello traders, welcome back to your FXCM YouTube channel. My name is David Londoño. I'm a trader and I also do market analysis. Today, we're going to be discussing or diving into the different uses for the RSI, the Relative Strength Index indicator. This is a popular momentum oscillator used in technical analysis to measure the speed and change of price movements. It ranges from 0 to 100, and I have 4 commonly uses for you. The first one will be identifying overbought and oversold conditions. So this is the indicator right here, the RSI. When we watch them over or above 70, this often indicates that an asset is overbought and may be due for a pullback, right? Or just a little correction. Okay. And when it's below 30, it suggests that the asset is oversold and could experience a price increase. I want to show you when that happens. For example, right here, we can see the indicator show us with a greenish area right here that we are on overbought conditions. We're going to deep into this to see how can we use this. Let's go to the second point, spotting divergences. This is very useful and very commonly used as well. For example, if we want to place like a bullish divergence, this occurs when the price makes a lower low, but the RSI forms a higher low, right? So signaling potential reversal to the upside. Or a bearish divergence, it happens when the price makes a higher high, but the RSI makes a lower high, right? So indicating a potential reversal to the downside. So let's go into it, right? Let's mix the one and the second use. So right here, we can see that we have overbought conditions, right? And we also see the price making higher highs. And even though the RSI make a lower high, then we had another higher high and the price made another lower high. We are under overbought conditions, so it's like we could think that the price will want to make correction, which happened after that. So those are our 2 uses that we can use in one theory or one idea for trade, right? Then we have trend identifications. The RSI can help also to confirm the strength of a trend. So for instance, during a strong uptrend, the RSI made above 50, like on these conditions, and during a downtrend, it often says below 50. So right here, we can see it's always all the time above the 50, and we can see that we have a very strong uptrend, right? A bullish trend. Finally, we have a short-term price corrections, and this we can say that we as traders can use RSI to predict short-term corrections within a longer trend by identifying overbought or oversold conditions. This is like the conclusions of these 3 uses, right? As we were watching in this example I was showing you, we have overbought conditions. We also have divergence between the price and the RSI higher highs or lower highs in this case. And we also have the trend confirmation on this RSI managing itself all the time above 50. So using all of these forms of analysis or forms to understand the RSI will help you to make a solid idea on what the price will make. And this is something also that you can work with other indicators that will help you to find entry and exit points. But overall, this helps you to understand or have an idea of what the price will want to do. This is a very simple indicator. Still, it's very powerful. I like it a lot. And well, that will be all for this one. I hope you like it. If you want to talk about other indicators, just let us know, drop us a comment, and I will see you on the next trading session.